The purpose of this video is to walk through the COVID protections available for people who have VA loans. If you are a subscriber to my page, welcome back, good to see you. If not, make sure you subscribe, and if you have a comment or a question, let me know what that is just below this video here, and I always do my best to respond as quickly as possible. So things kind of keep changing and getting adjusted, and so what I'm about to talk to now came into play August 31st of 2021. So this is super current information. Today is September 2nd, so I tried to get this out as quickly as possible. What I'm going to do is walk through what's called the VA Waterfall for people who are trying to transition off of their COVID forbearance. So as just a quick reminder, the word waterfall refers to the process through which the investor on your loan considers you for options. So it's not the situation where you just get to call your bank and say, okay, I want to transition off my COVID forbearance. Among these 4 options, I pick this one. I wish it was that easy, but unfortunately, lenders are allowed to kind of put you through a waterfall where they consider you for an option that's kind of most beneficial to them first. And then if that is unaffordable, they kind of move to the next tier. So you can kind of think of this as like a tiered plan where they review you for certain things in order of affordability. So for VA loans, the first thing that they're going to consider you for when you apply to transition off of your COVID forbearance is a repayment plan. There's lots of information on this page about what a repayment plan is, how that's different from a loan modification. So watch those videos if you have questions about that. But just real briefly, a repayment plan is a way for you to resume making your regular mortgage payments, and every month you pay a little bit extra on top of your regular mortgage payment toward the amount you missed. So if you were on a 6-month forbearance and the VA approved you for a repayment plan, they would be asking you to make a monthly mortgage payment, and then they would in some way divide up that 6 months that you missed and add it to your monthly payment. So it sounds good in theory, and it would be good if the amount that they added for these repayment plans was very low. But typically what we're seeing come through with these repayment plans are payments that are almost double your mortgage payment, meaning they kind of want you to pay 2 mortgage payments per month. So most people applying to transition out of a COVID forbearance are not going to find a repayment plan affordable. If for some reason you're in a good income situation and you do think it's affordable, maybe a repayment plan is the right option for you. But just know that if the VA offers you a repayment plan and they think for some reason that's affordable and it's not, you want to push back so that you get moved to the next tier in the waterfall. So after a repayment plan, the VA will consider just their kind of standard loan modification review process. Again, there's many videos here about what a loan modification is, but a loan modification essentially takes the amount that you missed during your COVID forbearance, it puts it on the end of the loan. They will try to see if they can reduce the interest rate a little bit, extend the term of this new loan out so that you can just resume making mortgage payments. And the mortgage payments should be very close to your original payment, if not a little bit lower. So that's kind of their standard loan modification review program. If that is not looking affordable for you, they then move to what's called the COVID-19 Veterans Assistance Partial Claim Program. So watch my other video here around what a partial claim is, but generally a partial claim is where they take the amount that you missed during your COVID forbearance and they kind of record it on title in a way that looks like a subordinate mortgage. So a partial claim is different from a loan modification, in that a loan modification, they kind of write you a new agreement. It has a new full principal balance, a new interest rate, a new type of payment. A partial claim is just a way to kind of bring you current on your existing mortgage. So they'll take the amount that you owe and they'll kind of say, you don't have to pay that or deal with that until your maturity date of the loan, or if you refinance or sell your property. So it's the partial claim becomes this non-interest bearing amount that just kind of sits there while you can resume making your original monthly mortgage payments. So sometimes in effect, a loan modification and a partial claim kind of do the same thing in that they take the amount that you missed and kind of push it off, but a loan modification will actually add the amount you missed to the principal balance and you'll have like a new agreement. A partial claim will just have kind of a subordinate lien on title or something that looks like a subordinate mortgage that sits there and is due at the maturity date of the loan, and then you just resume your regular payments. If you make it through repayment plan, it's not working out, loan modification, not affordable. If they, for some reason, do not want to offer you a partial claim, or if you're able to prove that that's not affordable for you, the last thing that they'll consider is what they're calling the COVID-19 refund modification. And so the refund modification means that you can potentially receive a refund of up to 30% of the unpaid principal to kind of help you bring the loan current. So other investors kind of refer this as to like a waiver of some of the principal, or perhaps a principal reduction. But basically, if it looks like you cannot save your home through any of those above options, they will consider kind of refunding you a little bit of the principal to kind of help reduce the balance that you owe. This sounds like the best one, right? And so most people kind of wish that this was at the top of the waterfall. For most of you out there who have a VA loan, you're not going to be offered the refund modification. That's just, in reality, you're not going to be able to get that, because if you're back to work and you're making about what you were making before COVID, they're not going to think that you're a good candidate for that. The refund modification is really for people who really are struggling to recover to where they were pre-COVID. So if you're a VA borrower who's kind of recovered your financials, don't expect to be offered this refund modification, but just know that this is kind of the last thing in the VA tier waterfall. The last thing to kind of note about VA loans is most other investors like Fannie Mae, Freddie Mac, or FHA are doing everything they can to kind of streamline the review process. The VA has maintained what they're calling an affordability review. So if you have a VA loan, you cannot expect to just be able to call them up and just verbally get on one of these options. It is very possible that the VA still will be requesting some financial documents for you. They've kind of retained this right to look in a little bit more detail than other investors have at your actual financial documents. So that's kind of the general VA waterfall. That's what you can expect to go through. If you want specific tips on kind of like how to best communicate with your lender, there are other videos on this page that can help you know how to do that. If you have questions, let me know. Best of luck to you.